Hi, my name is John Cash. I'm the CEO and chairman of the board for URG. We are a Wyoming-based active uranium mining company with operations at Lost Creek, which I'm showing on the screen here, and we're constructing out a second mine at Shirley Basin. So while we have two flagship properties, we have a number of other exploration properties and near development stage properties that I won't cover right now, but they are out there, and I encourage you to take a look at those on our website. But at Lost Creek, we've been producing there for over 11 years now. We've produced in excess of 3 million pounds. If you look at the EIA's data, over the last several quarters, we have been the largest producer in the U.S. We've got some very good offtake agreements in place with some major utilities in the U.S. as well as in Europe, and we've made an announcement on those. They're worth about 5.7 million pounds over the next 6 years. We've got a fantastic resource at Lost Creek with over 12 million pounds of measured and indicated and over 6 million pounds of inferred resource. The claim to fame at Lost Creek, as many people well know, is we've had very low-cost operations in the past. And as we ramp up production again, going into the hot market that's out there right now, we believe we can get back down to a very low operating cost. Our projections are that we'll get down to a little under $17 a pound. And I'll talk a little bit more about that toward the end of the slide deck here. We've got a pretty good mine life at Lost Creek. Over 13 years is what we're projecting. And the great thing about Lost Creek is a lot of the roll fronts we have not drilled out on the ends of them. So we believe that we have some very good opportunity for exploration going forward. In fact, this year in 2025, we plan on dedicating some drill time and some finance toward extending those roll fronts at Lost Creek, at LC East, and some other projects within the Great Divide Basin, and we'll be reporting on those results as the year goes through. The processing plant is fully permitted and licensed for 2.2 million pounds per year of production. The mine is licensed at 1.2 million pounds a year, and the delta between the two is intentional. We intend to bring in pounds from other facilities and toll process them at Lost Creek. That includes potentially competitors, but most importantly from our Shirley Basin project, which we're constructing right now. So I'll transition to that project. It is fully permitted and licensed, and we're in construction mode right now at Shirley Basin. It's just south of Casper, Wyoming, so it's only about an hour drive from a major town in Wyoming. It's licensed at 1 million pounds per year, and a lot of the infrastructure is already in place because it's a brownfield project. So the roads are in place. A number of the buildings are already there. Power's up and running. We will be updating the substation. We've already got our monitor wells in, and we've already begun work on the foundation as far as compaction and laying out the soil for that satellite plant. We've got a good resource at Shirley Basin, almost 9 million pounds of measured and indicated. And note that there's no inferred pounds. This project has been heavily drilled out, has a very good grade of 0.23%. That's exceptional for an in-situ project, and has an interesting history. We believe that it was probably the first in-situ uranium mine in the world, starting back in 1961 with permitting, and by April of 1963, it was in production as the first in-situ mine. It was a pilot project, but that pilot project recovered 1.5 million pounds and was quite successful. We believe the operating cost at Shirley Basin will also be very low, around $24 to $25 a pound. And that construction that's ongoing right now, we expect it to be completed very late this year, very early next year. We'll have to go through a pre-ops inspection with the state of Wyoming, but at that point, we'll begin operations at that facility. So we believe we're less than a year from production from Shirley Basin. For some of you, you may not be familiar with the term in-situ mine, but our company, URG, we focus on the in-situ technology where we utilize solution mining. We access the ore body using injection wells. So the picture you see here, this is the active mine at Lost Creek. This is our disturbance at an active mine. When we get done, we'll simply pull the wellheads and reclaim the area and return it to unrestricted use. So in addition to Lost Creek and that immediately surrounding area, we have a number of claims that we hold, and a total about 35,000 acres with mineralized roll fronts throughout that area. We've had exceptional recovery of mineral in Lost Creek. at over 90% or right around 90%. And we have a very low royalty burden at Lost Creek and at Shirley Basin, and that really helps with the economics. And we look forward to exploring at Lost Creek and throughout the green area on the map here in years to come. So in conclusion, I promised early on I would talk a little more about the economics. These are the numbers, audited, real numbers from 2014 through 2019. I'll draw your attention to 2015 when we produced just shy of 800,000 pounds, and you'll see that our average cash cost was a little over $16 a pound. The all-in mine site cost that year was around $44 a pound. So we know inflation is real. We're not going to get back quite to those numbers, but we believe we're going to be one of the lowest cost producers globally going forward. So with that, I'll conclude the presentation, but I encourage you to check out UR Energy. We're a well-established company with strong leadership, strong history of production, and low cost. We're a domestic producer, and we are the leading producer in the U.S. So thank you much for your time, and have a good day.